Hi folks, this is Lee Jackson again. This is our continuing video series on do-it-yourself life insurance or tips for getting life insurance. In this one, we are going to focus on term life insurance. Now, please try to understand that I'm going to make it as simple as possible. I've been helping folks like you obtain life insurance for many, many years, but this is do-it-yourself, so I'm going to tell you how to do it. So let's explain it. Number one, term life insurance. What does it mean? Term means a term of time. 10 years, 15, 20, 25, or 30. You have a term of time and you're covered for that term. When that term of time is over, no more insurance. So it's not permanent. It's only good for the amount of time you choose. Now you could keep it longer, but what happens is the price shoots way up. So unless you're really ill, it's silly to keep it. So what do? You pick a term of time, it's very inexpensive, and you get a quote, and then you pick up some life insurance. Real easy. But remember, with term life insurance, because it's very inexpensive, it doesn't gain cash value. You've heard of people that take loans against their insurance, or it gains value. That's different kinds of insurance. This is the least expensive. So it goes by your age, it goes by your state that you're in, it goes by your health, very important. Are you a smoker, are you not a smoker? So for example, $1 million of life insurance for a 40-year-old male that's in good health is about $39 a month from a major carrier. And think about what that does. $39 a month would protect your family or your business if something happens to you. And we're going to get into how do you figure out how much you really need, but I'm just giving you general figures. The minimum on term insurance is $10,000. The maximum is usually 20 times your earning power. So that's how the insurance companies figure it. What do I make per year? If I make $50,000 a year and I go bye-bye, I'm going to lose 20 years. 20 times 50,000 is $1 million. And it's your earning power over your life is how they look at it. Otherwise, people that made no money could ask for $20 million of life insurance. So there is a limit to what you can get. Now, underwriting does play a role, which means they look at your health and they rate you. They come back. They give you an exam, which is free. They come to your house, they take your blood, they ask you some questions. Once you get that done, it goes to the insurance company, they analyze it, you get a copy of it later, and they see what kind of health you're in, and they make a decision of how much they're going to charge you. So that's a great thing to do because you get a free exam. It's wonderful. For the first 2 years, they can look back if you said anything that was wrong or you lied or any of that sort of thing and come back and negate it. But after 2 years, they can't come back at all. Now, the statistic on term insurance is 2% of the people that buy term insurance actually collect. And why is that? Because you buy it for a term of time, and odds are you're going to live past that time. So your insurance goes out, and you don't have insurance. I gave you some cost examples. There's lots of companies out there. They're all good. You want to have what's called a beneficiary, and that is somebody that's going to get the money if you pass away. Let's talk about your needs. How do you know what you need? This is really simple, but nobody ever thinks of this. In my day, it was very simple. I wanted to get enough insurance that if I passed away, my wife could pay off the house. But in this day and age, that's not enough because what does she do for money after that? How does she pay her bills? How does she pay the debts off, whatever the kids are going to school? So here's how you do it, and this is something you can do on your own. You take a piece of paper, and on one side, you put your debts. What do I owe for debts, for credit cards? Your house, your mortgage, how much is owed on that? And all the debts you have, you put on one side generally. And on the other side, what do I have in my assets? How much do I have in savings, investments, and so on? And then you have to decide if you pass away, how much money do you want to give your spouse or your kids to live on and for how long? So if I want to give them $50,000 a year for 10 years, that's an extra $500,000. And when you do all of that and put it all together, that's how much you need. And people are shocked when they find out what they really need to buy in life insurance. It's a lot more than you'd think. And your needs do change as you go along. Like the kids may need school now, but 5 years from now, they don't need school, so your needs go down. And you paid off your house. You don't need to have that in there anymore. So your needs can change as time goes on, and those are the kind of things you need to think about. Now again, it goes cheaper for a woman than a guy at a certain age, cheaper for a guy than a woman at a certain age. It's very, very simple to do. All you have to do is shoot me an email, tell me what you want. You want term, What form of term do you want? What term of time do you want? 10 years, 20 years, 30 years, and so on. Your age and your health, and I'll get you some great quotes. Now, the last thing I want to talk about is return of premium. And this is a really exciting new development in life insurance. And what it means is, if you pick up term plan with return of premium, that means if I take, say, 20 years, if I'm still living in 20 years, I get all my premiums back, all of them. My insurance is gone, but I get all my money back. And that's a great thing. It's forced savings. No, you don't get interest before you ask me. That's how the insurance company makes their money to give you your money back. So if I'm paying, say, $40 a month, and let's round it off, it's $500 over 20 years, what does that work out to? That's a lot of money. $500 would be $10,000 you'd get back. That's a lot of money, and it comes back at the end of the time. Now, the last thing I do want to talk about real quickly is conversion. What is conversion? Well, when your term of time is up on life insurance, some of the plans allow you to convert it to permanent insurance, which means it never goes away. And why is that significant? Well, let's say I'm 30 years old, I'm looking good, I'm in great health, I get a great rate. What happens 20 years from now when I'm now not so good? Now I'm on pills for blood pressure, cholesterol, I'm not as good as I used to be. And when my insurance ends, I probably won't get reinsured because I'm pretty bad off. Well, with conversion privileges, you can convert your insurance before it ends to permanent insurance. As much of it as you want, not all of it, whatever you want. And they don't underwrite again, which means they don't look at your health and say, oh my gosh, we don't want to get this person. They go back to when they did it the first time, and whatever you were rated back then, because you were a specimen back then, you get the same rating. So you don't lose your privileges of insurance, and you can continue your insurance. So that's my talk on term life insurance. Please give me a call if I can help, or shoot me an email. My number is 310-756-5976. And be sure and look at the rest in this series, because we're going to talk about some other forms of life insurance so that you can make an informed decision and do-it-yourself life insurance. Thanks again. My name's Lee Jackson. Again, 310-756-5976. Have a great day. Bye-bye.